The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And let's check out where the markets are at right now. We got the S&P's up 12 points, the Nadex up 32. Looking on over at the Russell, we see it's up 10.6 right now on the day. Looking at the Dow, we got it up 114 points, just flying on up. We got gold right now, it's down 7 points. We got silver is down 1.5%. Gold pretty flat on the day. Oil is up 55 cents, up over 0.5%. And looking on over at natural gas, it is currently up about 1% on the day. Corn not moving that much right now compared to settlement, at least. Down $1.25. We got soybeans down $3. Euro dollar is pretty flat on the day, just down a couple pips. Pound dollar up 15. Aussie dollar down 41. Euro yen's currently up 36 pips. US yen up 30. Pound yen up 53 cents on the day. Dollar CAD definitely moving up 100 pips on the day. Big move on dollar CAD there. Dollar franc up just 33 pips on the day. So that gets us caught up on our current market wrap. Now I wanted to remind you, if you want to listen to TFNN, you can listen to us anywhere on your mobile phone at tfnn.mobi with 9 hours of live trading commentary and education every single weekday. So just make sure to tune in to us over there. And what we talk about a lot right here, we talk about Nadex. We'll talk about ways to trade Nadex. And so one of those things you'll want to do is hop on over to TFNN.com. Again, that's TFNN.com. And to follow along what we're doing here, click on the Nadex tab right there. So again, the Nadex tab. And under education, or under trading, click on demo trading account. So once you click on the Nadex clip, click on tab, click on trading, and then demo trading account. You can sign up for your demo trading account. Just fill in your username, your first name, your last name, your phone number, and then your email address. And then check your email. And in just a few minutes, what will happen is, maybe in a few seconds, you'll get a password. You'll be able to log in to your Nadex account and get immediate access. To get a live account, okay, there is a second benefit to getting a live account. To get a live account, I'll talk about that. Just go up there at the very top, click on Create Account, and then click on Start. It takes about 5 minutes to go from start to funded. There's only a $100 minimum opening account balance. Now, of course, you're probably going to put more than 100 in, but there is only a $100 minimum account balance. You may be wondering, how can I do that? Well, there are a lot of trades where you can trade for a lot less than $100. I mean, a lot of trades, not rare trades, constantly. There's a lot on there. And so, click on that tab, you'll be able to get that going, get that started. The big benefit of opening a live account, okay, is if you open a demo account, it's good for 2 weeks. If you open a live account, they'll give you another week on the demo. If you call them and ask them, they'll add another week. If you fund the live account, they'll give you another week. But here's the key. If you'll fund it and you actually just do a trade, it doesn't matter what trade you do. Now, you can do a lot of trades, but, let's say the only requirement is if you'll do a trade, whether it's a $3 risk trade or a $95 risk trade, it doesn't matter. So, literally, if you just put a trade on for $3 or $97, that counts. Only one contract. If you'll do that and then call up your Nadex rep, okay, which their number's right there at the bottom, right under that Start tab on the Create Account. Or you could also see it under Contact Us at the bottom menu under Getting Started. If you'll call them after you place that just one trade in the live account, then what they'll do is they'll extend it your demo for life. Okay, so this is a new policy they put in place for people who wanted to really get that demo going for a lot longer. Now, even once you're trading full-time live, you're still going to want a demo account to try new ideas and things out in and see things. And I suggest you learn and make your mistakes in demo first. It's a lot cheaper. But you're going to want to get that demo extended. And because 2 weeks probably is not just going to be enough for you to feel like you've mastered much of anything. You'll be getting it down. You'll start to understand some things. But you want to get that demo account permanent as quickly as possible. So if you'll just fund that account with $100, you'll place a single trade. There's no minimum balance requirement. Just an initial deposit of $100. If you do that, they'll extend that out for life, and any Nadex rep can help you out with that. So and that's the most recent update I got from them on how they're making it really easy to extend your demo. So make sure you do take advantage of that. It's very simple, very easy, and I look at it as, it could be a $3 cost to, get a demo account for life. So not bad to, it'll save you a lot more money than it'll cost you than trying just to go full demo because your demo's dead, and going full live because your demo's dead, so you just start trading in live, and you end up losing a lot of money instead of demoing out and getting it down first. And then as soon as you're ready, of course, and you can go, put the metal to the pedal, go straight on, and you can start really pushing the account, having fun with it, and putting more money into it, and doing more trades. Anyways, very simple way to get going. And then I have a lot of education that built in over on TFNN. They have some education tabs as well you can check out. But right here on TFNN, if you go over and you look at the Diagnostic Box Spread Analyzer on the home page, click on that. You can sign up. Get access to a ton of education in there on binaries and spreads. Get access to our spread scanner. Get access to our binary scanner, live and demo. Get access to our deviations indicator as well. So, and the deviations, if you don't know what those are, that is by itself, that's worth a subscription. It's pretty sweet. You can go in, and on the deviation indicator, what I do every night at 8:15 is pardon me, I got to clear my throat. Every night at 8:15, need a button. Clear throat button here, but cough button. But every night at 8:15, I post the deviation levels. And so right there, you'll see, like right here under the deviation levels, if you click on deviation levels, there's a lot of explanation on them and how they work. But if you click right there on the click here to view them, then you can see the new ones posted at 8:15 each evening. And it'll give you a good idea of when a trade is when a market has basically run its course. And I use this all the time when I'm trading. I'm looking literally at the deviation levels, and I'm doing volume spike trades. They're very simple, very easy to do. You just plot the deviations. There's different ways to put them on there, but one way to say it is plot the deviation levels on your market. And so if I go up and I see that I got a one deviation move, well, what does that mean? Well, what that means is basically there's you may have heard of standard deviation, and what standard deviation means is, what's the statistical probability it'll trade outside of this range, that it'll expire outside of this range, and it's very low. So when I say very low, I mean it's about a 30% probability. And so if I know, hey, I got a 68, 70% probability that it's going to stay in this range, then that gives me two things that are important to know. One, if I'm buying and the thing's going up, 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 okay? If I'm buying and it's going up, then I'm probably going to want to look at tightening my stops. So it's a fantastic trailing stop. Now, this doesn't matter if you're trading Nadex or not. I got a NASDAQ chart up. You can put up a gold chart. You can put up Forex charts. Doesn't matter, okay? So, and we cover a lot of markets. We cover, Euro dollar, pound dollar, Aussie dollar, dollar CAD, dollar franc, Aussie yen, pound yen, Euro yen, US yen, Euro pound. We're also covering gold, silver, copper. Other deviation levels that we're covering on there, oil, natural gas, corn, soybeans, and we're covering the S&P E-minis, we're covering the Dow, we're covering NASDAQ, and we're covering Russell. So, whether you're a futures trader, a spot trader, even if you're trading ETFs that mirror it, like let's say you're trading GLD, if you're trading anything like that, you can use these levels. And of course, also if you're trading the Nadex contracts, you can use the levels. And as you can see, like I had, the way that I trade. One of the algorithms that I wrote here and had some traders help me out with, if it goes up, hits a deviation level, I'm looking for a potential reversal. So remember, we talked about one of them being tightening our stops. The second one could actually be going the other direction. All right? So the market's moving up and, boom, it hits it. And the way that I do it, just so you know, okay, for tightening stops, so we'll say I bought, like right over here, I bought in on this bar, like at this price, okay? And the market's moving up, moving up, moving up. When do I trail my stop? When do I tighten it? Because I don't just want to, get kicked out too quick. And I usually don't let it just hit it and fall back. So if I tighten my stop right here, I could easily get stopped out on this bar. I make it close above the deviation. So on this bar right here, it closes above the deviation level. And so at that point, what I'm going to do is I'm going to put my stop 5 ticks below it. So now I've been able to walk in a nice gain right there, or protect at least a nice gain, from 35, 34, and then down to about 30, let's see, 35, 45, 25. So when we're talking, about 10, 12 points of profit right there. So not bad at all. And then now if I get, that's my trailing stop method. If it closes above, I'm going to tighten it up. And so I got to wait. I got to look. Okay, didn't close above, didn't close above. Just looking. Also, boom, it closes above. So there's my stop, and I walk that in real high up here. Actually, it's about, we're looking at a solid 10 to 13 points on that trade. And because what happens is eventually with my stop being there, it doesn't get hit, and then finally we definitely get hit at this point. Now the other place I could tighten my stop is, I said one of the methods I use, this gives me a potential short. If it's red, it's short. Okay, it gives me a potential short. So that's that pink right there. That would be another sign that if I haven't already tightened it up, I might need to tighten it up. It also could be an indicator that I need to go short. And so I don't just short because it hits a deviation. And that's a mistake some people will do, is they'll go, hey, I'm just going to play, it's going to hit it, I'm going to play the other direction. I want to get some confirmation that this thing isn't going to keep going, because sometimes it will go 2 or 3 deviations. Okay? It's rare, right? How rare is it? Well, higher than a deviation, there's only about 30% chance it'll, actually expire higher than that level. Second deviation, we're talking, a very small percent. And if you want to get down right into the percentages, then you can actually go up here. Let me show you this on the deviation page, and it'll show you what every deviation level means as far as percentile. So, 0.5 deviation, 34% chance it's not gonna, close above it. Then you got the 0.7. That's more just an extra deviation level for tightening stops. 1, there's a 68% chance it will not touch, break this level as of expiration. And if we go down to, 2 deviations, well, now there's only a 5% chance it's going to break a 2 deviation level. So if you get a, hit at that, that's a high probability reversal trade. But again, I want something telling me to go the other way. But it's 3 deviations. There's only a 0.3% chance it's going to keep going and expire, above that level or below that -3 deviation level. So you can see the probabilities really start working in my favor, and that's one of the 2 main points in trading, as you want your probability and your profitability. And then the third main point, if you want to go into all 3, you actually have your planability. So do you have the ability to actually execute the trade? Because if you can't sit there and do the trade, if you can't get filled, it doesn't matter, okay? But also, you want to have a high probability, you want a high profitability, as high as you can get, and usually you're giving up one to get the other. Right? So if you're 50-50, you're basically, looking to risk 50 to make 50 on a 50-50 trade. That's a buy or sell at a price. But if you increase that probability with using something like an in-the-money binary, or if you can increase that probability by maybe having a low-risk spread, then that increases it dramatically for you. And we'll talk about how to put these together so you can know different ways to use them to find trades and do trades, whether you're doing outrights or Nadex, or my favorite strategy, combining the 2 together. Stay right there. Be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So, once you hopped in there, you watch tutorials, you got going, you're looking for some trades. I'm going to look right now just to see if I can see anything. We always check out to see if we can see any, like maybe silver or gold trades on the day. So give me 1 second. I'll pull those up. And if we got any that we might be able to do, looks like we might have a potential, and I mean a potential, so we'll see here. One, but looks like I'm not even seeing any trades on gold, silver. That would be a premium collection. But we might, I'm just going to go back in one more time and check and see. It's like on silver, we got a, it just went away. Yeah, there was one there, but it was literally just gone, like here and gone that fast. So they just wrapped on up. But was looking at one that might have been a potential one. So we might get one on gold. I'm looking for a potential popping the trade there. If I do get that, we might be able to do a long on it. If we do, if you want to get ahead and be ready, and I'm not hitting the button yet, okay? So I know some people following along live. Not hitting the button yet, but I am looking at the 12:30 expiration for today. And again, I'm not on that one yet. I want to see it actually go in the money a little further, and we'll see if the premium's even there to do the trade. But that's the contract I got my eye on at the moment, because it looks like it's heading up. Right now it's out of the money, so you could get it really cheap if you wanted to do it. But I want to see it. I'd like to see it literally just move a couple more ticks. And if it does, we could have a potential trade there. All right. So I'll let you know if that pops up. But just so you know, if you want to have the ticket ready or whatever. And we only got a few minutes. We only got, literally like 4 or 5 minutes for it to happen. So if it doesn't happen, we'll be too shocked, because we have 4 minutes till expiration. That was, we have 2 minutes to get in. And I don't want to push the trade. I don't want to try to force it and just throw money away. So I want to make sure that there's a good trade there if we take it. Okay. So back on over to, the deviation levels we're talking about. There's a lot of different ways to trade them, and we can look at those different ways. But one of them, let me add in, and I've talked about this before, but some of you may have missed it, and some of you may have heard it, but you don't quite have it mastered yet. And so I'd like to add that on here. And let's add in, actually let me load up. Let's see, there we go. So add that on. There we go. Now we got our spikes. And then again, I want to just visually show you what I mean by the spikes. We're going to go on down here, and we're going to we're going to add our volume. There we go. So we got our volume on there. And yeah, so this actually would be a good example, because we actually passed, this is actually a great example, just to show you what I am talking about on good ways to play, directional or, my preferred favorite premium collection trades over here. Going in and see how we almost hit a 1 deviation, but in reality we did hit a 1 deviation. So how can I say almost and in reality? That seems a little self-contradictory. Well, the difference is, okay, I'm looking at two measures on the deviation. I'm looking at the actual deviation level, but I'm also looking at a deviation from high to low. So you see, like at this point right here, how I'm measuring, basically the high to low hasn't actually crossed a 1 deviation move. And so here it has crossed a 1 deviation move, and now I'm waiting to see if I get a volume spike. I got a volume spike, so in that case, I would be looking for a short trade, okay? So again, I'd be looking for a short trade on that volume spike. And let's see what we got. If that do that, so what we do is then we'd sell a strike that's at or above the high for the closest expiration we can get and collect about 20 or 30 bucks. And then by doing that, then we could actually collect money on the way back down. So that would have worked out great there on the Russell. Also, another way, let's just say you're an outright futures trader. If you're using these deviations, then you could go in and then you could just short the Russell contract itself. And what you would do is you'd go short over here. And let me pull it up. So you go short like right here when this volume spike happened, and then you'd wait, and within 3 bars, if it breaks the low of that bar, then that bar breaks the low of the volume spike bar. Okay, then we put it up here, then you just literally go short right at that break of the low by a tick break of the low. And it moves on down. Then it moves up a little bit, it oscillates on you, so that's just the hard part about trading over on let's see here. Yeah, that gold one did spike up a little bit. Looks like it might pull back down. But, okay, I'll finish this up when we have a little more time for me to walk through it versus trying to rush through it there. So wait right there, and I'll walk you through the step-by-step on how to do this and how to actually see the volume spike. All right, we'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
2014 has arrived, and Tom O'Brien has put together a special webinar for his subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the 3 most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these 3 sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of the special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And so when did I sort of break down V-spikes and how to identify a V-spike, a volume spike, and I also call it spike striker, if I'm using it on, because I'm using a strike and it's right when the spike strikes that certain zone. And so, you can add on a couple things, but depending upon what kind of chart setup you're using, what I'll do is I'll go in if I want to see it. Now, I don't have to see it. I just made a little indicator that helps me with that. But I'll go down and choose the Russell. I'll add it twice. Or maybe even I'll add it 3 times. And then on this, what I'll do is I'll make this say 10 minutes, okay? And I don't want to see the bars. You'll see why in a second. I just want to see the volume. So I'll make that transparent. And then I'll go down here, and I'm going to make this one say 15 minutes. And then I'm going to make these 2 transparent. And make this one transparent. And again, because I'm just trading it, and this is sort of an addition. So if you have heard it before, one of the additions I've made is where I'm really actually taking the entries off of the 5-minute bars, but I'm using the 10 and 15 to see if there's a potential, volume spike. So I apply that, and once I'm done applying that, now I'm going to go back into my indicators, and I'm using Ninja Trader right now. You can download it free from NinjaTrader.com. It's free to get. And then I'm going to go over here and I'm going to find the volume. And so I'll just add volume up, down. Volume up, down. All it means is if it's an up bar, it's green. If it's a down bar, it's red. It's nothing special. Okay, and then I'm going to assign it to the one that I want it to be on. So I want, say, this one to be on 10 minutes. Say OK. And then also say, you can say what panel. Like, do I want it in a whole another panel or do I want it in a different panel? So I'm going to put it on panel 3 because that's where the Russell is. And then I'll take this one, and I'll put it, and I think I have this, I may have it wrong, but I can always fix it. Assign this one to the 15-minute bars. Okay, panel 4 there. Hit apply, let's see if that lines up right. I may have to put it in panel 4 or 5. Yeah. So let me go back one more change, because I have 1, 2, 3 panels. So I got volume. I need to put this on panel 4. That's where I have my transparent 10-minute bars. I'm going to put volume on panel 5. That's where I buy transparent 15-minute bars. Now I can see all 3 volumes at the same time. I can see 5, 10, and 15, and I don't have to have them, as big as I do, but I can do that right there. And I can even shrink this down and out of the way so I can really see my price action. And notice how, my alert gave me, hey, I got a 10-minute volume spike. So check out this. What we're doing is we're looking at the bar before, during, and after. We don't know we have volume spike until the after, until this bar right here. Okay, notice how I said we have this one. So it pops up, and so right here I got a volume of 2,100 contracts. Here I have a volume of, before it I have a volume of 872, and after I have a volume of 830. And I don't care about volume spikes just randomly throughout the day. I care about them at deviation levels. Okay? So that volume spike happens, and when that volume spike happens, then I have a potential trade. So that's going to appear literally on this bar right there, because I'm using, even though I'm on 5-minute bars, I'm not going to see this little signal pop up till right here. And so when it breaks this bar's low, which is when that happens, that's where I'm going to have my short trade. And I'll look at going short above the high, which is probably going to be this high of the bar, because I'm going to look at the highest high right there since then. So that high of that bar right there, may even go a couple ticks higher simply because I see like there's a few bars back that are a little bit higher high of the day. So somewhere around 1158, 1158.5 is where I'm going to be looking to sell my strike, and that's going to be in the money. And so I want to get about $20 or so premium collection. Now say 20, you can do 10, you can do 100. So you can do $200 premium collection, $2,000 premium collection, doesn't matter. And I'm going to choose the closest expiration I can get. In this case, I'm going to choose the closest expiration I can get. So I can really make that money on time. And when I do that, then, if this thing doesn't happen till 11:24, I might get the 12. I'll probably definitely get the 1. Most definitely I would get the 2. But, like the 1 would be the, most likely trade where I can get the strike I want and the price I want. Very important to get the combination thereof. Don't just, look at the buy and sell signal, but look at, am I getting the strike and price that I want to get? Well, when that happens, then I go in and go, okay, so now I'm going to sell it, and as long as it stays below, let's just say I got the 1158.5. Let's say that was the strike. And I'll sell it for $20. I can make $20 per contract I put on, and as long as it stays below that by 1 o'clock, which it did, you see this moved down, then I get to collect all $20. Now, occasionally, depending upon what I see happening, I might decide to close it earlier. Maybe I'll close it back for 5. That does lower my profit, but what it does do, it helps me out because, let's say I chose the 2 o'clock, and we got down here to this 0.7. I see it starting to oscillate and bounce. That would be a case where I might want to close it out early. I might be getting a little bit nervous on that trade, decide it'd be a good idea to close that trade out and just take my profit and look for the next potential trade. So, then we get a long signal on top of that, potential long. So, with all that stuff combined, let's just take our money, walk away. This is only meant to be a short 30 minutes to an hour trade. We're not looking to hold it to the end of the day. And so that's where I shut that one down. And that really is all there is. I mean, it's really simple. When there's a spike, then the bar after that spike, if within 3 bars it breaks the low, sell, or within 3 bars after the high, if I'm doing a reversal trade on the long, if it's going down, I'm going to buy. Then I buy if it breaks 3, a tick above the high within 3 bars after that 3rd bar. Then I got my trade. Either way, simple trade to do. Key to the trade being at deviation levels, and don't be afraid to take my profit early. Not because of profit. Again, I'm not going, I'm up, so I'm just going to take money. Take profit because something on the chart tells me to take profit. Because maybe you're only going to be up $3, but if something on the chart tells you to take your profit, just take it. Move on. It's not your trade anymore. If you see that there's a danger in here, it's not worth it. Just take it. And then for risk management, I don't have to hold on to the thing till expiration. Okay, I don't have to be risking 80 to make 20. My max risk is 80, but I don't have to take on my max risk. I could go in simply and get out when it hits the strike for somewhere around $50. So if I sold for 20, let's say I bought back for 50, I have a $30 risk on a $20 potential trade. All right, so that's the V spike trade off of a deviation level. Another trade that I've played with is when it's sort of using the stop loss method, and it's whenever a strike is hit. So let's go over, I think, and see if we can find one. Maybe we saw it on NASDAQ. We'll pull that up. Okay, so another potential trade is over here, and this is sort of a scalping trade. It's not a trade where you're going to go in, you're expecting to hold it for a long period of time. But when it breaks the low, it's like right here. Remember we talked about if the bar moves above the high, we move our stop. Bar moves above the guy again, we move our stop. So when it breaks that, okay, and then it comes down, and let's say our stop hasn't been hit, and we'll just ignore it, act like I don't have a short signal there. Moves back above it, I move my stop up again. When that bar is broken, right there, that would be where I would get out of the trade that I bought way back here. But it also could be a scalp trade where I decide to go ahead and go short and try to grab a 15, 20 tick dollar profit right there on a quick move. And we got a nice move off that. I mean, if you look at it, we got a move of about 4 or 5 points right there, where you could easily have grabbed some decent ticks out of that trade, scalp it, boom, done. So, but the key is it has to break above it, and then it has to break your low below it. So it has that 5 tick low. So would we have done it again? All right. So is there another trade? Well, let's go over here. Let's say you got to buy. You're looking at this. You're trying to figure out, okay, where am I going to put my stop? Right here. Doesn't close above. Doesn't close above. Going. Closes at, but not above. Let's see here. Doesn't. It closes below. Closes at. Closes below. Finally closes above. So right there, that's where our stop is. So far, we haven't got another entry to go short on the NASDAQ trade since our last one earlier. And so that V spike would have given you a nice trade right there, but it would not have given you one on the most recent close above because it hasn't broken that trailing stop yet. And we could look over, we have the Russell up. Let's go ahead, let's check out a different one. Right over here. And see if we can find a Dow. We'll look at the Dow. And there's a lot of different markets you do this on. Haven't actually, we got close, but did not hit a deviation. So I'm just trying to use a deviation method here. Let's go to the NASDAQ. And on that one, so we went through that one. The S&P. So let's check out the S&P. That's the one that we need to check out. And we'll see what we got there. On the S&P, not quite a deviation. So basically we had a couple indices that had the signals on them. We could also go in and check out different markets. Maybe you're looking at, gold. Okay? So, are we at a deviation from high to low? Yeah, we definitely were at that a long time ago because it moved down and then it moved back up. And so we come down here, looking for a potential trade. Went below, didn't break the stop. So really waiting on basically just not a trade there. If we go over, we could look at maybe oil. And I'm just trying to fly through and see some examples for today. And these are trades where, you're looking at getting, 1 or 2 on a market a day. You're not looking at getting just dozens and dozens of trades a day. But they're solid trades as long as you'll be patient. And if you'll watch a lot of markets, you can get a dozen trades a day. You're just not going to get them all on the exact same market. This would be one where I know some traders, now this is not my preferred method, okay? But I know where some traders will go in and they're looking at it and they'll take this bounce off the settlement. So oil came down, it bounced off the settlement after moving up. They saw a V spike and then they would take that reversal. So they could take that reversal off that. And that is a trade. It's a modification of the trade. It's I would say it'd be a second tier, First tier being the most preferred method. So, the pickier you are, the less trades you're going to have, but the higher probability you're going to have. So it depends on how picky you want to be. And sometimes, you may decide it's worth it to be a little less picky. Just don't just take everything, though. Let's see if we can find some other good potential ones. All right, so there we got the market's moving down. We got a V spike right there. 1 deviation level, closed below. Got a V spike. Now we have a buy right here when it breaks. 1 tick above the high. So let's see here. That would have happened on the 15-minute bars. So you go on there, you get that buy, you're in. Definitely a profitable trade. It runs up literally from almost 1.5. You got another V spike here where you could have had another potential trade. But definitely at that 1 deviation level with a volume spike. You can see that volume spike again. It's a 15-minute one right down here. There we go. Trade's done. Now we're ready to get going. And so I guess it actually would have been over here being 15 minutes. But it's ready to, take off and do the buy on this next bar. And, that's a solid, simple, easy trade. That's Aussie dollar. Some of you are Euro dollar traders. You hop over here, you look at Euro dollar, see if we got enough movement on it. And, we got to move up to 0.5. We got to move down to 0.5. And very close to a deviation high to low. And we get a volume spike, so there's a good potential buy trade for you. So, it's really simple to find them. You just, got to spend a little bit of time getting used to it. But it's not rocket science. It's not trying to see that magical pattern in your head, that you can always see when you look backwards on the chart, but it's always on the left side. It's never on the right side of the chart. This is the kind of pattern you can actually see on the right side of the chart. And so we go over here. Look at this. This market moves down about half a deviation. Then it does break one deviation high. See how it broke over deviation. We got a V spike on the 5-minute. And this is right here on soybeans. So on soybeans, we got a sell right here. It breaks the low. There's our entry. And you can see how it just trended on down. And then I got a couple other short entries with it. And so again, waiting on, the more I can wait on that one deviation, the better off I'm going to be and make that my main trade. And that basically is the trade for that system. Now you could have 3 or 4 systems, but for that system, that's the trade. Corn, not enough going on, really. So there's really no trade on corn today. Let's see, we can look at a couple other ones. See what we can find, maybe like dollar CAD. So we got, because I know it had some big moves today. So how did it work out when it had some really, really big moves? And the market ran up 2 deviations. So massive move right there. I mean, just hugely massive moves on this. And basically you're looking at a few bars just not getting the break below that low, fortunately. And because if it did, it turned around. But we had that 1 deviation spike. We had a volume spike at 1 deviation, but we didn't get that break entry within 1, 2, 3 bars. So no entry on the 5-minute CADs there. And then it spikes up again. And we got the 5-minute spike, but it didn't break below the low of this bar on the 5 minutes. And then we got a 10 and 15-minute V spike. Okay, so now we're looking for a break below here. We did, looks like, get it by a tick on the 10. And we didn't get it on the 15. We got it on the 10 by a tick. So on the 15, we got it. And right here, with our stop not that far away, so 745, it would have been a little bit, about 8 ticks for a short trade, premium collection or otherwise. The market did trend on down before finally turning back around. So if you're looking at the 11 or 12, you would have had a winning trade. Cool. So quite a few good trades in there. Super simple system, deviations, volume spikes, put them together, and trades that seem to work out very well for us. Hopefully you're finding the same thing. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Folks, here we are back right on the Diagnostic Trading Hour. We're going to call her in. We got Mike from Dallas, Texas. What you got, Mike?
Hey, Darrell, and Happy New Year to you.
Hey, Happy New Year.
Ask you, thank you. I wanted to ask you, you had mentioned premium collection.
Uh-huh.
Would you kind of go over a little bit of would you have used the previous example in a premium collection trade?
Would I use the last example? Okay, well, I can give you one right now.
Okay, good.
That I'm actually in the middle of. How's that sound?
Great.
Okay, cool. So in here on euro dollar, I went short. Okay.
Okay.
And I mean, I have a lot of different strategies, but I went short. This is what I call expiration premium collection, and I went short in on the trade, and shorted the contract for a premium of $27.50.
Okay.
And the strike on it is, $36.19. So it's pretty close, okay, which is usually going to happen on expiration premium collection. A lot of people don't like expiration premium collection because they're so much closer, but they're really fast. I mean, they take 5-10 minutes.
Right.
And so if I am going to collect, like I said, what over here, $27 on the trade, then as long as, since I went short 36.19, what I'm saying is that the statement right here on the contract, euro dollar will be greater than 1.3619 at 2 p.m. If I sell, I'm saying that statement is false.
Yes. Okay.
I'm saying it won't be greater than. I'm saying it will be less than or equal to. Okay?
Correct.
So, and the benefit being, since euro dollar is already less than 36.19, I'm already in the money.
Okay.
Meaning, if nothing happens, I make the 27.50.
Correct.
If it goes down, I make 27.50. If it goes up but doesn't expire above 36.19, I make 27.50. The only way I lose on the trade is if it goes up and expires above 36.19.
So regardless if you're going to buy or sell, it's best to be to try to get a binary in the money?
Yeah, I would say the majority of my trades, I mean, there are the exceptions, but the majority of my trades are where the binary is literally just is in the money because, again, I have 3 out of 4 scenarios I can be profitable on. Right. So the disadvantage, I mean, it's just like, the majority of option traders that trade, that collect premium are usually that do credit spreads, make a lot more than those that usually do debit spreads and all that stuff.
Yes.
And So the majority of those, are not the credit spread traders are usually the more profitable traders. And so I like to put myself on that majority side. The disadvantage is you have much higher risk. Okay? So like I'm only going to collect, $27 on this trade or whatever if we look at it. But if a binary is worth $100, then I could now, if I held to expiration and if it went all the way above and expired above, then I could lose, what would that be, $72.50, okay, on the trade.
Right.
So I need to be right basically 3 out of 4 times just to be break even.
Right.
Okay? But 3 out of 4 possibilities, and I will be. The probability's in your favor because, again, 3 out of 4 things that can happen onto you on the trade, you'll make money on the trade.
Okay.
So I put in the probability in my favor, and that helps compensate. And so remember at the beginning of the show I was talking about you want either probability or profitability or a combination thereof.
Okay.
So, if I'm only going to, if it has to move in my direction, then I should get a much higher payoff. Like if I'm going to buy one that's above it that only costs $20, I should get an $80 payoff because I have a lower chance of winning. But if it doesn't have to do anything and the chances are that it's going to, be profitable for me, then I should be able to, basically I'm going to get less money on it. So it's increased probability increases less profit. But that's all you're doing. You're collecting that time because 3 out of 4 things that you profit. This trade's looking pretty solid. So.
Yeah. Okay. Well, thank you so much, Darrell.
Hey, you bet, man. Thank you.
See you.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.